live.
Euro-dollar gets the bad joke, doesn't it? This is going to be really hard.
Hey, welcome everybody. Welcome back. We're back. Mohawk Forex team live from Northern Arizona and London on NFP day with 30 minutes to go till the NFP for June. And we've already had some successful trades this morning on our cable trade. As you can see, we're heavily in profit there on the pound dollar trade. I've just actually ended it because I don't want to be stuck in any trades before NFP comes out, but this was a successful trade that I posted into our group. I'm going to be looking at gold today. NFP, as always, as you can see, it's highlighted here. We're using our Axe trading system, and all the information on how to get access to this and join our group is at www.mohawkforex.com or in the description on the YouTube channel below. So give us a like, and we're going to do some true scalping and see what we can get. Trading with a $400 account today, so medium, small size to me, medium size to some people, but that's kind of a risk a lot on gold. Like I say, we started at 300, so we've already won 100 today already, so we've got a bit of house money to spare, so we'll risk the whole lot on gold. And we can have a quick look at cable as well as that progresses along in the background. And obviously we've got Bloomberg on, and obviously the big news is obviously the assassination of the ex-Japanese Prime Minister. So if you're trading JPY pairs, Nikkei, all that kind of thing, and obviously watch out, it's going to be extremely volatile. It's moved quite a bit since that announcement. As you can see here, look, leader Abe assassinated in shooting. So we've got that, and also obviously we've got the Boris Johnson resignation in the UK as well. I think it's kind of priced in. I think people knew it was coming, so the market is kind of priced in. And as you can see, the pound actually went back up to over 120 from a low of about low 119s. It dropped back down there again today, and obviously it's picked back up as things are being sorted out, who's going to take over the election, competition to take over the party and all the rest of it plays out. But it's going to be a couple of months anyway, so I think the market's kind of knew that was going to happen. And there's still people saying that the cable's going to go down to 115. So a lot of people say there's more downside yet. We're still any buys are just pullbacks in a bear market. It's not a change of trend. We're still in a bear market on pretty much everything across the board. So always be aware of that when trading, that, you know, if you're hedging, obviously selling is obviously percentage wise better than buying at the moment. So, but it still doesn't mean we can grab buys as we did today. Look at our cable trade, we found the bottom, and this is already what are we, already 42 pips in profit, and I kind of set a TP of about 55, 57. But this one's been a good winner for us, and again, I'll teach people how to trade this if they join the group as well. So gold is what we're focused on today. This one should move the most with NFP, and obviously it's looking to be a lower figure. 240 is the prediction. I'm just going to reload this. Signed out. As we know, it's very rarely that any of these news predictions get right, or Bloomberg. It's been wrong the last few months. So the further it's wrong, the more move we should get. Go 20 minutes to go. Yeah. And previous was 333 down to 240. So job market slowing down in America is what they're kind of saying, but this could be a surprise. Could be 500, could be 600, and then we'll see if we get some sells on gold. We'll go the opposite way, remember. We'll see. We'll play out with the RSI. We've got our RSI scanner. A new addition that we've added on here is a MACD. This is actually a MACD, and basically just the information you want to know from the MACD. Where's the cross? And when it goes green, obviously it's crossing up, so you can link that with the RSI to be a buy, as you can see here. When it's red, it means it's crossed down, and obviously if the RSI is not red, then obviously you don't take the sell. It's risky. So if you sync these two together, we were using the stochastic oscillator, which is also another way to confirm a trade. But I think this just looked a bit cleaner. And this again is something you get access to once you join the group. But this is the MACD that's built into AX. So like I say, it gets rid of all the stuff you don't want to know. All you want to know with MACD is when it's overbought, oversold, and it's crossing back up the two lines. And that's what this bar graph is basically telling us. Like here, look, it's red. So you're looking for a sell. You're waiting for price action to come below our baseline and the RSI to go red, and bang, there was your sell. And then it's up to you how you want to take your profit. You know, that's multiple ways to do that. We're more bothered about getting the entries. Same on the buy here. Look, RSI came out the neutral zone, went green. MACD goes green, bang, there's a buy. And there was multiple trades you could have had on gold on any of these, and we're on the 3-minute time frame. If you want to, if you haven't got the time, it's too messy for you in a 3-minute, then go to 15. It works just as well on a 15-minute. Yeah, sorry, Jussie. Yeah, it works just as well on a 15-minute time frame. You've just got to wait a bit longer. We're only 6 months into this bear market. The average bear market is like a year and a half. And even try it on an hour time frame, you know.
Yeah, if you want to swing trade it, absolutely.
That's it. And our price reversal signals were all bang on. There was a price reversal to the negative here. That was a sell. Price reversal positive. That was a buy. And another sell here. What you got to look for is where they're going to sell down to. Me, I would have taken the sell once I'd seen a red MACD in that. I know the RSI didn't go red, so you know it's a short trade because you're going to hit that neutral support zone in the blue here, which is kind of the daily pivot. So if you did take that trade, you know you're just going to be in and out for like, you know, 10 pips or so. With the other ones, if you get that signal, everything syncs up like the red RSI, red MACD, then you know you can hold, and then you wait for it to go green, look, and you get in on the trade there. So again, I don't just enter blindly on these signals. They're just an extra thing that give you, you know, that something might be occurring when they pop up. You know, I don't just hang a sell in. I will wait and go, okay, this is just a slight pullback. I might better bag a few pips. There's a sell coming here, and here it was, and then there's a buy coming here, and it's a bit later on, like 15 minutes later. So, but they're very accurate. They do work really well. That's one good thing. This MACD bar is really, really good. So again, just cleaned up the chart. I was liking the stochastic on the chart. I think some people, it was a bit confusing just seeing two indicators on the same plane. So MACD just gives you that extra confidence if you need it, you know.
Just feel Gareth should have gone to Cardiff and not LA.
You're very upset about that, aren't you?
I am.
Cable, look, as always when you're in a trade, look, it goes into more profit. There you go. So the Asian cable trade is doing really well. It's getting well up into our profit. We're about 45-50 pips up.
You and I still have an invite to the tots. We got to do that.
We've got to make that happen next season. I agree with you. Futures down to 10. Payrolls 20 minutes away.
There was one you had to wait for today. Usually you can enter this pretty much straight away, but we had to wait. We had to wait for confirmation of the trade. It's about as mechanical as you get, which is quite nice. Those are what a bonus trade. And there's another one we do on DAX as well. So again, it's all stuff we show in the group.
After the attack, broadcaster NHK said he had served in Japan's Navy. Abe was 67. He was perhaps best known for his plans to revive Japan's
It's been arrested
through monetary easing and regulatory reform, which was called Abenomics. The monthly US jobs report is expected to show that employment growth slowed in June. A Bloomberg survey has a median estimate of 268,000 jobs being added.
Gold breaking above resistance.
90,000 back in May. The data will factor into the Fed's decision on how much to boost interest rates this month. The numbers are out just minutes from now at 8:30 a.m. New York time. Boris Johnson is still in number 10 Downing Street after announcing he plans to resign, but his plans for an orderly retreat are being threatened. The ruling Conservative Party wants to speed up the contest to choose Johnson's successor by the end of summer. The Prime Minister's office had floated a 3-month timetable yesterday. And for a third time, Spirit Airlines has delayed a crucial shareholder vote so it can extend merger talks with Frontier.
So Bloomberg is saying 260 on NFP. my FX book and all the others are saying 240. So like I say, I want to see it about 500, 600, so better than expected, and then we can look at maybe a sell on gold. But we'll watch the RSI. We know the RSI is key. They say we've got a nice break on gold at the moment. It's broke a nice zone.
The IX Industrial is a miniaturized Ethernet
Up in
connector
overbought
that is
territory.
approximately 75% smaller
Getting up
and
there, 79, yeah, still a continuation. It breaks the resistance.
This mini
We'll be
Ethernet
going up.
connector and signal connector
Getting back up to our old 1800, you never know. It's been a long
addresses
time
the
since it's
net
been
device
18.
manufacturers who find RJ45 footprint to be limiting
About a month or
in their
so?
design.
And there you go, look. Our cable trade has hit TP. Liked it. I could have held it for another 10 pips, but like you say, you know, on another day it wouldn't. And yes, it's best to get out of a trade when you know things are coming up like big news events. So that was a 1 to 1.6 risk to reward. You know, you had to set the stop loss where the stop loss is. It had to be below this low here. And obviously you could, you know, you could just move it, move your stop loss as you got into profit, you know, which I did. So you could have just moved it, ascended it anyway, just in case there's any severe spike down or up, more likely down on NFP. So that was another good winning trade. Gold, let's say, is just fighting this, nice. Here we go. It's so 268. Previous 390. They're saying everyone's in the same ballpark. But remember,
Yeah, but they're gonna get it wrong, and they're gonna publish new figures after it comes out. We see this every month.
yeah, get them adjustments.
Yeah,
The average earnings also play a big one.
yeah. Oh, we got it wrong. Here's the right figures.
Jeremy Grantham.
We've had
Yeah.
a very, very abnormal
Yeah, gold's pushing up. Look.
First available on the Bloomberg terminal, then on Bloomberg Television and Bloomberg.com.
Well, whenever you're looking at this through the micro lens, you can see what that result actually is and which way you should be hedging yourself. It's nice whenever the news drops because you know that that's at the point the market's going to move. But whenever we look at it through a micro lens like we do down on a 3-minute time frame, we see exactly the direction that it's going and what that news event actually holds.
Exactly. At the moment, I'm setting. We've got levels. Look how many levels of here. We've got support 1, 2, 3, 4, 5. So and then we've got resistance right up here. So that they're the kind of, again, I'm not setting pending orders. I'm just sort of saying this is where potentially, if it doesn't move any higher, NFP could got heavy resistance, could spike above here. If it's a buy on gold, and if it's a sell, we could be going below all this support here down to the minor level, and then maybe down even to here. You know what I mean? There's a heavy support level. So that's kind of where I'm thinking NFP might move to. You can just look left and you can see the areas that are marked out for you, the blue zones. The thing about the system, you don't have to draw them, they're automatically put on there for you, so you can see. You've got to keep going left. Is there, look. That's why we can come down to a 3-minute time frame with confidence, like Justin said. At the moment we're overbought on gold, 82, so you know, if the news is better than expected, we might get a shoot down. It could go the way of the news, so you know, we'll go in the direction, we'll wait for that. Obviously remember, price action moves first. It always moves before the news event comes out. You can't, it's always the way, so don't panic if you miss. If this suddenly spikes up and you miss it, just wait for the candle to pull back. When the candle pulls back, then get in on the trade, and it'll fill the wick, at least for the first 3-4 minutes. And then when it hits a heavy resistance zone, guess what you do? You go the reverse, and that's it. 3 or 4 trades, job done. And then you wait for it to actually take a proper direction. But you'll see the candle shoot up and you'll go, oh, I've missed it. But it'll pull back. That's going to be the direction. So you just wait for the pullback, wait for the wick to be exposed, then get in on the trade. Take your profit, get out. and then wait for the pullback.
Bloomberg is fastest with the numbers.
That's ideally what we try and do. You know, I'm going in on 0.5 lot sizes today on gold. Well, it's about 50 cents a pip. So it's $5 commission. Ugh, there you go. You have to pay it. That's in and out the trade. It's $2 each way. The margin 144. So I'm very tight with a 400 account. I'm very tight on the margin. I've got to get the direction right, or I can be stopped out. But we'll go for it. You know, if you don't practice, and practicing with live money is the way to do it. Yeah, a small account. You know, no substitute for. You've got to go for it and bite the bullet if you want to be a scalper.
Every quarter, Tom, I think.
Yeah, I think I like that. Every quarter,
Go
make
every
it a
3
point.
months.
Hey, Adams, overlooking
Got 9 minutes to go. 10 minutes to go.
a nation's politics.
Gold's just
into the
dropped.
end of 2022 and
That drop.
particularly heating up to 2000.
And look at that. We even get the price reversal signal again.
We'll heat up. We begin our coverage here.
It wasn't NFP. I might be tempted.
From now, with a frequent guest, we are honored to bring you
We've got
former
red
Governor
MACD.
at Boost
We're just
School
looking for
Chicago,
red RSI.
Rosner.
That'll
Randy
be a
Abbott
confirmation of a
hosting
sell
this
signal.
time looks for a new inflation regime where
But you're too
flat out
close
we
now
don't
to the
get
news,
back
so
to
yeah,
2%.
don't
What
advise anyone
kind
to
of
take a
job
trade right now.
economy
You know.
do we have if we get back and stay at a 3% inflation run rate?
Well, obviously, the job market is still quite hot, even if the numbers aren't so strong today. The unemployment rate is still under 4%. We've been generating an astonishing number of jobs. So I think the job market probably will weaken, but well, I think it's undoubtedly the case that it will be weakening, but it's still relatively strong. The issue is going to be, what are inflation expectations? Are they entrenched? Will wage demands continue to be high?
I look, Randy, at the linkage here into wages as well. Are we even, you know, as Powell talks about a strong economy, are we anywhere near a wage
RSI is
spiral?
now red. Look at that. You see, that would be your confirmation. And it's already. I have to reset my level now for the NFP. So this is where I'm thinking if it's a buy. And now I'll just adjust this.
The key is, will that persist?
Because it's going to be
Will it
below
be
this
over 2
zone here
years,
now.
over
Look,
5 years,
well,
that even as the economy starts to
I
slow
think
down,
there,
even as the job
the
market
support
starts to slow
zone.
down, do people say, hey,
Talking
you know, the reason I have a job is not just because I want a
potential
job,
of
it's because I want
48
to
pips
provide all, you know, the best
to
possible for my
86
family.
pips.
And no matter how
So
hard I work, I'm just not
either
getting
way.
enough money, so I need more money. That's the psychology that they have to worry about, and that's why they're trying to move so expeditiously now to avoid that happening.
Randy, $1 trillion question. What makes this Fed pause? Where does that come from?
I don't think they're pausing anytime soon because I think
confirmation again of our cable
at
trade.
the
Look,
upper end of the ranges where they've been.
TP.
Short-term expectations much higher than they have.
Ooh,
I
gold
think they want to
spiked
make
down
sure that they really
hard.
stomp out the
Yeah, look at
possibility of
that.
inflation
Getting
expectations.
ready. The manipulation has started.
And I think Powell has made
Yeah.
it very clear.
But it could still come all the way down to this heavy support. Look,
Landing,
see.
softish
What I'm
landing.
thinking we could have a
Fighting inflation is our
quite a big
priority.
move.
That means a slowdown. So I think
Maybe they know something. Maybe they know the result isn't going to be what. The heavy support, heavy resistance, they're the two major zones where I will look to take the reverse. If there's a spike, it doesn't, I mean, as long as the candle doesn't finish above or below them. If it just spikes, and I'll look to get in on the reverse.
How close are we to that point where companies look around and say, okay, we haven't been able to attract workers, we can't afford to pay them enough to get them in the door.
We've got red MACD, we've got red RSI, we've got red candles.
Not clear yet whether the jobs are
At the
going away.
moment,
We've seen some of that over the last few months.
just
Sometimes
broke through
the
neutral
jobs
resistance.
numbers actually
It's
been
hanging on
below
there, look, as it sat on it.
but it's not because the job
Always
market
on the
is
daily
weak, it's
pivot,
because
you'll find it always comes
they
back to.
can't- the firms can't hire people, and they're unwilling to push the wages up enough to get them to come in the door. So I think it's, you know, we'll have to see how.
Got
how
like
things play out
5-6
over
minutes to
time.
go.
But I do
We're
think
loaded
that
up.
the job market is going to be weakening.
And if we talk about a weakening job market, to what extent will the Fed tolerate that weakening? What do you think the threshold is between softness in the labor market that the Fed wants to see, that it's actually trying to achieve, and that which causes the Fed to second guess itself?
Well, I think the key thing that they're going to focus on, I think, as Powell has said, is they've really kind of pivoted to focusing on inflation. And so the key thing will be inflation and inflation expectations. They understand that the economy is going to be slowing, and I think this is
RSI
exactly
back in
why
the neutral
the market
zone.
is moving so fast now. The unemployment rate is still below 4%, so the political pressure isn't
Yes.
so strong yet on them to slow things down. They're not quite getting the blame for a slowing economy because, at least as far as the job market is concerned, it
5
hasn't slowed.
minutes.
So that's why they need to move now. Those consequences will come later, and hopefully they won't have to go too much higher too much later.
That economic data is 7 minutes away. We'll get Randy's response to that as soon as that number drops. Mike McKee's going to break it down for us. He's back in New York. He's in the studio. Mike, what are you looking for from that number in about 7 minutes' time?
Well, the headline number is expected to be 265, and I think it's going to be an interesting question about what Randy was talking about with Kaylee, the idea of whether companies can find workers or
Watching
not.
this move.
Anecdotally, in the Beige Book and in the ISM surveys, we've heard that it is still tough to get workers, at least trained workers, for the jobs that are available. So that'll be one interesting thing to watch. And then I'll be paying attention to the participation rate. It's supposed to tick up a tenth to 62.4.
Yeah.
The number of people who get hired, unemployed and employed in the household survey that produces the unemployment report doesn't matter whether it's a high level or a low level. It matters the difference between them and the number of people who are in the labor force. So even if we are getting fewer people hired, it is possible that the unemployment rate goes down from here.
But Mike, to the claimed hysteresis of Blanchard and Summers, the permanently unemployed, they can't get back into the force, or even the caution of Jeff Sachs at Columbia that there's a part of America that's not going to participate in the American labor economy. Does this jobs report factor that in, or do we just forget about these people lost?
No, I think what you have to look at as this job report comes in, and in future ones, given the situation with the Fed, is we'll look at the minority unemployment rates and see if they start going up because they're usually last hired and first fired. See if they're rising. We can look at the number of people who are working part-time for economic reasons. That is another sign that companies might be cutting back. And of course,
3 minutes to go, and it's pulled back a little bit.
Going to be put into the part-time workforce. So
it did break the neutral resistance, and you got an area of support here. Look, perfect.
Higher interest rates, and definitely seems to be slowing down.
Mike McKee breaking down that number in real time, the best at it.
Yeah, we've still got red MACD, we've still got red RSI. That's still no indication of the direction. You know what I mean? You can't preempt anything. This is going to be what it's going to be.
Very good.
Countdown, as you can see.
Judge stepping up to the plate.
2 minutes on my FX book. See how quickly they print the result. And really, you've got 1, 2, 3, 4, 5, 6, 7 news events, and ideally you want them all to be green or all red to push, give it the momentum rather than a mixed bag. But of course the payrolls is the main one, but it's nice if it's backed up with the average earnings. So if they're lower, printed to be the same, look, 5%, 0.3, so no change. But the payrolls is meant to be down, unemployment rate's the same, so we'll see.
Up next from New York, this is Bloomberg.
We're going to be ahead of Bloomberg. Remember, they're going to be as a bit of a lag on their site. So, well, good luck, everybody. Anyway, let's see. Let's get in there. Click them buttons. Let's see what we can get. See how quickly our broker on IC markets will will execute the trades as well. That's always what you're up against when scalping, as always.
Especially on a big news day.
Yeah, you'll click a load of times and your orders won't get fulfilled, then they will, then they won't. So, but you just got to go for it and hope one sneaks through. Like I say, I've got preset at 10 pips anyway, 100 points. Some might take me out of the trade if I get it right. Let's see.
It's almost the end of the year, but Bali is still quiet and empty. I am here in
17 seconds. Right, let's see. Let's see if these zones are hit. Let's see which way we're going to go. Ready, get ready. Move. Get move. All the news event comes out, look. 3 seconds, 2 seconds, 1 second. Move. Look at it move down.
Drop.
Yeah, what a drop.
Drop and go. Ew.
Yeah,
Hard
well,
way.
brilliant.
1 clear.
Yeah,
2 clear.
already there, already
3
there.
clear.
Yeah, we've got $120 on that already.
4 clear.
This
5
is-
clear.
Yeah, another $100. Even look at the dollar. Look at the dollar drop as well. Brilliant. You can see the result was better than expected, so hence why the drop on gold.
7 clear, and I'm done. $700 for the day.
Well done, bro. I just ended my trades there. Ooh, I'll just post those. We cleared 1, 2, 3, 4, 5, 6, 7. 7 trades I got away there. 7 trades.
Got 7 as well.
And we're 300, so that is great.
Lucky number 7.
Yeah. I clicked more, but obviously they will execute.
Yep. I was having a lag on my broker side too.
There you go, you see, better than expected, and gold sales. So look at that, result was 370, so 100,000 more. 100. See what Bloomberg says. Let's wait and see what we can get. See if this to move around a little bit. Look at that, it hit exactly where we said. Our neutral support has changed. Look, that was the heavy resistance. Perfect. That's great. We doubled our account nearly, so I'm well happy with that. You can see it pulling up now. Look, ranging around. Look at the dollar.
We are seconds away from a payrolls report in the United States of America. Going into that payrolls report, equity futures slightly negative on the S&P 500.
We're already there, Jonathan. We're already in. We're in, out, and we've traded.
At 296.68. Your
Got a bear signal. Red MACD, red RSI. What more do you want?
The inflation side of the debate. We have
was great.
372,000 jobs created in the month of June. Offsetting that a bit is a 74,000 downward revision to the prior 2 months. Payrolls come in at 381. Manufacturing payrolls are up 29,000. Unemployment rate unchanged, 3.6%.
Yeah, that's as predicted.
Where we're in that 3,
earnings were the same
range. Average hourly earnings, bang on, 0.3, same as the last 2 months. This is going to give the Fed some comfort because the month over month
now
is
watch gold. Look,
accelerating. Now they'd like to see it maybe go down another tick, but I'm not going to speak for where they think a good level is, but it is coming down, and that pushes the year-over-year level down to 5.1%. Now, the number that last month for the annualized rate of earnings was 5.3, revised up from 5.2. Labor force participation, though, here's an interesting number, 62.2. That drops a tick from 62.3 the month before. Economists had thought it
Watch
would
for a
go
pullback
up.
and a continuation.
So,
That's
it
a
looks
lot
like
of weight to
people
fill.
Yeah.
looking for work. I'll have to dive into the employment numbers here, but it
watching.
looks like fewer people looking for work, and maybe that is why, even though we had a big payroll number, we did not see change in the unemployment rate.
2-year yield, we have liftoff, up 8 basis points on the session.
Yes, got 3 buys there. What do we get? We got another $50 there on the buy.
That green light is a little bit brighter for them to go again. 75 basis points at the end of this month. Yields up, stocks down a third of 1% on the S&P. The pain where you'd expect the pain to be, down 0.8% on the Nasdaq 100.
I'm done. I'm not giving it back to the house.
For the Nasdaq 100 so far this
That's
week.
it. I'm the same. I just wanted to get that retracement. Like I say, I always say to everyone, if you miss, this is exactly what I said. Look, there was the direction. We saw it move. We went for the wick back. It filled the wick, went back. We got loads of trades here, and then you wait for the pullback. And here's the pullback. Look.
Right now now it's a movable feast. And
Look at that
very
fucking
important
pin bar.
news for global Wall
Golly.
Street. John
Ooh,
quotes
man.
the individual yield statistics, which are
That's
important.
massive.
But the spread widens out too on the edge of misery here. We had a huge move out to negative 5.4.
No FOMO. No FOMO. No FOMO.
I got in. Another 28, 17, and 50. Another $100. That's it. I'm done. That's it. I'm not doing any more. That's it. I'm done.
Close the laptop.
That's it. 3 more buys.
75 is what's on the table.
Mine's sitting closed on the seat beside me. I'm just watching the chart.
We'll see. I'm not going to say they won't do 100 basis points, Tom, because I thought they'd do 50 last time. Then 2 days before the meeting, they went 75. So my
was great.
worth nothing. I will talk about this move at the front end, though, up 11 basis points, clearly pushing back against this idea this Fed can slow down on rate hikes anytime soon. For many people, Tom, it will be the labour market that's got to scream at them, stop. And it's not doing that right now. Inflation's going to keep nudging them to go again and go again. I have just one question for the economists out there this morning, Tom, in this data. This is another month of really robust payrolls data, Tom, on a headline. Yet unemployment's still there at 3.6%.
NFP in the bag.
Wages are flying here. Just my perspective on looking at the incoming data, Tom. Just an observation, not a judgment about where any of this is going. Just an observation at the moment.
There's enough moving parts where everybody can find a
Now it's pulling back, you see, but look at that. That's a great spike. That's the kind of, and when you set the levels, it's really, nice. We've got the levels. Look, the Axe trading system showed us where the level might go down to, and it smashed it. So that is a perfect. All you have to do is get the direction right.
Blacker African American unemployment fell to 5.8 from 6.2.
We did.
So no sign of people getting laid off. Last hired, first fired. In that
we took
did not change 4.3.
1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 trades in the end. I doubled up. 14 trades.
Still a very, very low number there. And then taking a look at the numbers that go into the unemployment rate, the labor force fell by 353.
And all done in 7 minutes.
Was 62.2. Employment was
6 minutes.
By 300.
Trading. That is true scalping.
Was down by 38.
Yes,
so,
sir.
The household survey diverging significally from the establishment survey in terms of number of jobs. But
now we can reset.
The change in participation not moving.
You can just watch this play out, but that's what you want. You want this big move. And most people stay away from it because they don't know how to trade it. We've just shown you how you do it. RSI was spot on. The MACD was spot on. The result was spot on. There was a good enough move from the general consensus to give us the momentum, and obviously we know gold trades the opposite direction, so good news equals sell on gold. It's sometimes it comes together, not always, but now we can wait for the open. Let's have a look what happens. See, look, there was the drop on pound as well, pound dollar.
Is that history now with this odd economy?
This is why I said you don't want to be in a trade. That's why I got out of my cable trade before. I mean, look, I once got stopped out and it's picking up back up actually, but you just don't want that scare moment where it drops like 50 pips or whatever. So
basis points at the next meeting. Obviously, we'll get some inflation data between now and then. They're also going to get a GDP report because they'll know the numbers before we know them. When they make their decision on Wednesday, we'll find out on Thursday at the end of the month. But I think they're going to go 75, and I think there's nothing in this report that would slow them down from that.
Randy, there's just a question I have. I don't want to make too much of a big deal of it.
So yeah, I hope some guys in the group bag some pips as well, along with me and Justin. And like I say, we will now look for the open in 40 minutes time and see what we can bag on that. We'll probably might go US 30 this time. Might switch this up.
Different surveys.
So look, US 30.
Of gathering the data, so they're not always exactly the same. And
as you can see, US 30 as well went the reverse. Good news. Oh, we'll sell. There you go. So there's a nice double top as well. The US 30, again, because it's pre-market, will always go. I say will always. I hate saying that. Well, a lot of the times go the reverse before NY open. That's the kind of thing we find that happens.
it's too difficult to make too much.
No,
of that.
correct on
But I
open.
think what it
You
says
got
is
it.
that there's a large number of people
You know.
who I think are just not going to come back.
So, and that's what happened here.
I think especially older workers that
Gold
come in
goes the way
really,
we
really
expect it to
robustly,
go on NFP.
before the pandemic struck. I've just said
There's your NFP trade on US 30. So again, if you was unsure, all you had to do was see that signal, see the red MACD, see the red RSI. What you're going to do? You're going to take a sell. You're not going to buy when you've got all that loaded against you. So, and that was
Randy, great to have you with us.
that was a drop off. Look at that, 124 pips.
On payrolls and yields on a 2-year up 9 basis points now to 3.1. We can call it 3.11% on a 2-year yield. The light stays green for this Fed to go again, perhaps 75 basis points. Looking forward to catching up with the panel in about 20 minutes time. Rick Reeder, Mohammed Al-Arian, Sabaja Rajappa, Mike Collins, and we'll talk to the White House Secretary Walsh Tom coming up in about 50 minutes or so on Bloomberg TV.
Right, well, while we wait for the open, I'm just going to mark this up. I'm going to go and make a coffee, keep the stream running. Won't be long. That way you stop yourself trading as well. Over trading. We're going to get ready for the NY Open. We're going to trade that and see which direction the market goes in, maybe to the upside. We've got the Fed speech as well, so you've got to watch out for that. That is the news traded. You know, that is it.
Well,
there you
Tom,
go.
it's an odd economy as you point out, but it's a payroll report as
0.6.
nailed right at
So
the beginning that solidifies.
we'll keep this running. I'll be back in 5-10 minutes. Just going to get a coffee on. See you in a minute.
A slowdown in payrolls. You heard Randy talk about that into the fall. That's still the case, but it's not slowing fast enough, and so you know the Fed is going to have to do more. And when you see the lack of labor force participation, and I agree with Randy, we don't want to overinterpret, 0.1,
yes.
here, there, but you haven't really seen that, and that's a real problem on the wage inflation front. So, the lack of payroll slowing here and the lack of an increase in participation is just again highlighting the pressures on the Fed here, that you have an overheating economy and they need to really push on the demand side. And so you're seeing the reaction in the front end, reflective of that.
Jeff, I want to go to the wheelhouse of what you do, which is linking full faith and credit into trying to not lose money here. Priya Misra over at TD Securities talks about a very serious inversion, perhaps even a greater inversion than what we saw within 2000. Folks, this is where the 2-year yield is substantially higher than the 10-year yield. What does each basis point mean of larger inversion going forward? What does that mean in the real world of not trying to lose money in fixed income?
Yeah, well, the first part of that, of what it means, and you're seeing a bit of that movement in reaction to today's print, where bigger increases in the short end, lower increases in the long end, and a flattening of the curve, is really the market expecting the Fed to tighten into a recession. And this isn't a new expectation, but it's certainly the reaction again to today's data where, as I just said, the labor markets are very hot. The Fed has to do more. And if you look at kind of what's priced into the market in a forward basis, it has the 1 year or the Fed funds rate 2 years out from now lower than where it's expected in 1 year. So what is that saying? It's saying that the market is expecting the Fed to push us into a recession. And that's the same message that you see when you talk about an inverted yield curve, that front end interest rates are going to reflect Fed policy. The longer end interest rates are going to reflect that future expectation of recession. And you heard Powell, basically admit and really in the minutes that they're willing to take that risk because the bigger risk is letting inflation become entrenched. And I think that's right.
I mean, Kaylee, it's so important here. And I'll have the chart for Monday, folks. We'll do it in the 5 a.m. hour if they let me in the building. But Kaylee, I look at curve inversion and we forget how rare this is. I really got to go back 30 years to get out to a 0.5 percentage point inversion in the curve. That's how rare what some of these strategists are talking about.
Yeah, we're talking 1980s, the last time we saw a yield curve inverted by 50 basis points. And yet, that is what we heard from Priya Misra earlier. She basically echoed the sentiment that the Fed is going to be focused on inflation. They're going to continue to be aggressive, even if we do see that softening in the economy. Therefore, you continue to see the short end a lot higher than the long end. So, Jeff, do you agree with that we could ultimately end up at half a percentage point inverted? Would the Fed tolerate that?
Well, it's really about the broader question of how will, as we get into the fall and you start to see the impact of a slowing economy, how will the Fed balance its two objectives between inflation fighting, which is front and center? What they're saying is the number one objective. It's kind of easy to do that when the labor markets are red hot, and Secretary Walsh, as you're going to have later on the program, takes a victory lap. It's going to be a lot harder for the Fed and therefore for the market to still talk about inflation as the only objective when we're looking at an environment when inflation, the year-over-year basis, is coming down, but unemployment is potentially going up, or at least these payroll figures are going down. So, Priya's call on the inversion is really a statement that they're going to maintain into a slowing economy this very aggressive stance on Fed tightening. They may or may not do that. I think it's an open question as we get into data that is a little bit more mixed in terms of the growth inflation trade-off. But clearly, if they maintain this degree of inflation fighting focus into an environment that is clearly slowing, then yes, you could see that degree of inversion in the curve.
Okay, so the operative word there being if. The question of whether or not that the Fed is going to blink. It used to be a conversation of September. That clearly has shifted, with some people still looking for 50 basis points in September. How long, Jeff, do you think it will take the data to deteriorate enough that there is a potential that the Fed thinks twice?
Yeah, I think we're looking at a slowdown in the jobs market into the fall. I think that sets up, September, October, November periods where we see that kind of trade-off really starting to show up. And these reports become a lot more important. The Fed meetings are going to get a lot more interesting when you have that tension and they're starting to think about and talk about slowing the pace. A lot of that's going to depend on the pace of slowdown in the inflation side. And there's an expectation that you get that slowdown. And so this kind of movement in two sides here, falling inflation and rising unemployment, is going to make a very difficult period for the Fed. It's not where they are today. So I think later this month, it's going to be 75 basis points and a more clear path. But I think as we get into the fall and the impact of the tightening and financial conditions shows up in the labor markets, then we're going to see this trade-off manifest in the Fed's decisions.
On radio and television, if you're joining us, Jeffrey Rosenberg with us with BlackRock. After a buoyant jobs report, two-year reacts sharply with a higher two-year yield on 11 basis points, 3.12%, with some substantial -4 basis points curve inversion as well. Equities on the chin, ever so slightly, not down a lot. Futures down 26, Dow futures down 103. The VIX comes out 0.36 points, 26.44. Jeff, you're living a Bloomberg total return all-in index of a -12%. I'm going to chart it out from 2020. Is -6% annualized in bonds. How do you hide? Do you hide by going short duration?
Well, on the rates side, so much of that is the combination of two extraordinary things, Tom. First, we came into this bond market with very low inflation expectations. This transitory was priced into the bond market. And so when you have low coupon and you have a reset in inflation expectations, that's the impact. So bond markets do a really bad job of pricing unexpected inflation, and that's what we got. The good news, if there is some going forward, is we priced a lot more inflation here into bonds. And so you've seen increases across the curve in yields, a lot of increases in the short end. And yes, shortening duration here makes a lot of sense because duration has been a tough environment and an absolute return environment. And so the yields are getting to a better place. Now, we need to see the inflation forecast validated for that to manifest. There's still a risk there, but certainly we've priced in a better inflation expectation trajectory. If we start to realize these forecasts in terms of inflation coming down, some of that yield increase is going to be a little bit more protective in the front end of the curve.
And Kaylee, what I'm hearing here from Mr. Rosenberg is the immense amount of uncertainty going forward. And let's already sell it here up to the inflation report of next week.
Yeah, an inflation report that could near a 9 handle on CPI, Tom, on Wednesday. So that's going to be something that this bond market is watching carefully. And talking of the uncertainty that's out there, the amount of volatility we have seen and continue to see, we've almost gotten used to the idea that we see double-digit basis point moves on yields. The 2-year yield right now doing the exact same thing today, up a whopping 11 basis points on the back of this data. It is remarkable the extent to which we see the bond market moving and the uncertainty that is out there. Jeff, I'm wondering when you think we will get a clear enough read that the bond market can make a decision either way.
Yeah, look at the consensus forecasts. You can find them on Bloomberg ECST. Sorry for the product plug there for you guys. But the consensus forecasts have inflation on a year-over-year basis, coming down. So we need to see that. And as you point out, the CPI reports are as important now than these payroll reports. Arguably even more important, as inflation is really the central issue for the outlook for financial markets. So that's what we need to see. That's what the bond market needs to see on these monthly figures, coming down into the forecast range, and seeing the broadening of inflation story start to pull back. It's been a bad set 2 months in a row where it's been the opposite. And that's why we've gotten this change from the Fed, as Jonathan pointed out, expecting 50 and getting 75. That's because you've had inflation really show up on the surprise to the upside. So we will be able to have a little more confidence that we're not getting these persistent inflation surprises when you see it in those CPI reports.
Jeff Rosenberg, thank you so much. With BlackRock, always on Jobs Day. Let me give you the date again, folks. On radio, on television, good morning to you. Some good guests coming up here to close out the hour here. And we do it with equities a little bit softer, but yield moves 12 basis points. That's a ginormous, folks, CFA talk. Ginormous move to 3.13% on the 2-year yield. The unemployment rate status, 3.6%. The economist Farrow said that was odd. Yeah, maybe. Non-farm payrolls a buoyant 372,000, but a revision brings it down to 298,000. Still a very, very strong number. We recalibrate now. Kaylee Lyons and Tom Keene with Ira Jersey, Chief U.S. Rate Strategist at Bloomberg Intelligence. Ira, I want to go to you. The challenge the Fed has on something I hate to talk about, which is this balance sheet. And what the Fed's going to do with the flows of stuff they have on the balance sheet. How does a buoyant labor economy change how Jerome Powell puts in sell orders for bills, notes, and bonds?
Yeah, so the Fed is not actually selling anything. They're just not reinvesting the maturities that came up. And you saw that in a big way just a week ago, because keep in mind that the Treasury maturities are really only 2 days a month, right? The 15th and the last day of the month. So last Thursday, you saw a pretty significant reduction in the Fed's balance sheet. And that will continue, obviously, as they even ramp up a little bit more come September. And that's, will have a modest effect, I think, on the market, but mainly you're going to see that in the auctions. So when we have the 3-year auction next week and then 10s and 30s on Tuesday and Wednesday, that's going to be where you're going to see some of the squishiness in the bond market. And you've actually had a few pretty weak auctions last week. People don't want to get in front of this market. Katie mentioned the volatility. I mean, this has been, I don't want to say completely unprecedented volatility, but it's been a few decades since we've had these types of yield moves.
Yeah, it's been absolutely wild. And of course, looking at the moves off the back of the data, it is more movement at the short end, a more inverted curve. Right now, negative 5 basis points. Priya Misra says we're going to negative 50 basis points. Ira, what say you?
Yeah, so we've had a call of between about negative 40 basis points for more than a few months now. I think that the inversion of the yield curve is going to look a little more like it did back in the 1990s than it did the last 2 cycles when you got to maybe negative 10 basis points on the 2-year, 10-year curve. So I think 2s, 10s, at 50 basis points would not completely surprise me. I was just talking about this morning, like, hey, we've seen so much flattening of the yield curve that we still have to be very cognizant of when does it end? And it probably doesn't end quite yet, because as both Jeffrey and Priya have said in the last half hour on your show, look, it's going to be time for the Fed to continue to be hawkish, but at the same time, that means that we're going to have rate cuts at some point in the future. So that's just going to increase the amount of inversion that you're going to get across the Treasury curve, probably.
Okay, so what would be an appropriate expectation of the terminal rate right now after this data ahead of CPI next week, Ira?
Yeah, we've still been at 3.5% at least. I think 4% is not impossible in terms of the terminal rate. And if they go 75 basis points, you heard Governor Waller yesterday in his talk mentioned front loading of hikes, so another 75 and then 50 in September. They go another almost 200 basis points this year. You could get up toward 4%, particularly since it looks like the glide path of inflation is going to be a bit slower, I think, than had been hoped. So I think that means that the Fed might have to just hike just a little bit further than maybe the baseline expectations of some people. So that means that you can get 2-year yields up another 30 or 40 basis points in a hurry.
Ira, thank you so much. Ira Jersey with us. Back-to-back, Jeffrey Rosenberg and Ira Jersey. No one does that like Bloomberg surveillance. The VIX out of full stick now, 1.4, excuse me, the VIX out 0.37%. I'm sorry, that's my annual mistake. 26.45
yes.
is okay. Let us switch to the equity markets right now and take every advantage here with Michael Casper. He's with Bloomberg Intelligence, equity strategist, a CFA. He's the only one in the building that can spell Schenectady, so we're glad that he could be with us today. Tell me what is happening across Gina Martin Adams' world with earning revisions. How are you preparing, given a buoyant job economy, for the mystery of guidance in earnings?
Yeah, earnings revisions have started to come down. If you look at our chart book from last week, we have a net revision breadth chart, which shows the number of negative revisions versus positive revisions. And that's finally starting to turn over. That's finally gone negative.
Do you have a number on earnings growth? I mean, forget about guidance forward. At the present of this earnings season, what's the statistic you have on earnings growth?
It's going to look, or at least consensus is close to 10%. But again, it's kind of a mystery where margins are going. I mean, margins are slowly being revised down, operating margins revised down. And the magnitude of the miss on operating margins is really the big question, where that EPS number is going to end up.
How much of that margin pressure do you anticipate is going to come from the labor side, considering, yes, we saw 5.1% year on year, but month on month, we were steady. It doesn't seem that wage growth pressure is getting worse, at least right now.
Yeah, I think still quite a bit. And that's going to be mainly a problem for discretionary and tech and some of the more growthy stocks. But the non-farm payrolls number coming in way higher than expected kind of suggests the Phillips curve is back in vogue. Inflation's going to remain high. Margins are going to remain under pressure.
Okay, we're just getting some headlines out of Raphael Bostic of the Atlanta Fed right now. He's talking about how the jobs report shows the economy is strong, saying that they can move 75 basis points at the next meeting and not damage the economy. How much economic damage do we need to see before it does real damage to earnings growth that, by and large, even given all of the supply side input cost pressures we have seen, have been able to hang in there?
Yeah, there's going to need to be quite a bit of damage to hit earnings growth. I mean, when you have high inflation, you're also going to have high revenues, right? So revenue growth is still going to be pretty strong. You've really got to collapse that margin line. And companies have been pretty good about taking that hit in stride. You've really got to collapse that margin line, though, to get the hit on EPS.
Are you seeing companies adapt? Just as simple. I'm a huge believer that given the cards dealt, companies adapt. Are you seeing, within the microcosm of a zillion companies in America, are you seeing the beginnings of adapting?
Yeah, I mean,
Give us an example.
The one that really sticks out in my head is Amazon. They put that 5% surcharge on for inflation a couple months ago, and that's just really an example of one of the biggest companies taking advantage of the inflation situation and adapting.
Does the zeitgeist underestimate what you at Bloomberg Intelligence are seeing every day?
Not necessarily. I don't think so.
Okay, well, you're allowed to, Kaylee, Michael's got to help us here. He's supposed to say, no, Bloomberg Intelligence is all-knowing.
Yeah.
They are all-knowing. We so appreciate their insight. If we could take this down to kind of the sector level, I automatically, after data like this, after looking at the moves in the bond market, take a look at the banks and just looking at the select sector SPDR ETF, which is how I kind of gauge the action for the sector as a whole before the opening bell actually rings. up 0.25%. How do you balance the idea that, yes, the Fed is going to be hiking rates, that's going higher, but you also have an inverted yield curve and fear around a recession, and put it into a thesis for the financial sector?
Yeah, so the financial sector, trades very closely with the 2s10s curve. Obviously, that's inverting, possibly getting even deeper inverted. So that's going to be a negative for financials performance. Kind of doesn't matter as much for the fundamentals for financials. That's going to be more about the 3-month, 5-year, and some of the other curves. But certainly performance is going to be impinged by the 2s10s inverting.
Michael, thank you so much. Michael Casper with us with Bloomberg Intelligence. Kaylee, let's wrap this up if we can. I'm going to go through the job statistics with a 3.6% unemployment rate. I would note Canada with actually some negative numbers, but they get, I believe I can say, a record low unemployment rate north of the border. That in itself is interesting as well. And then on the jobs run, I mean, I'm sorry, Kayla, we're running at a 300,000 level.
Yeah, it's hot, Tom, and maybe hotter even than the Federal Reserve would like. Even though they want to be able to say the labor market is strong, it can tolerate this economy, us being aggressive and hiking rates. But at some point, they're going to want it to cool down. That's kind of the goal here, and you're not seeing it yet. As we think about all of that, what we are left with is a big move at the short end of the curve. The 2-year yield right now is up about 10 basis points. It is an inverted yield curve to the tune of about 4 or 5 basis points at the moment, with the long end kind of hanging back a bit.
Wow.
It's pretty stunning, these moves in the bond market. I know I should be used to
Cool, and we're back. Coffee is loaded. So just moving away, we can see US 30 has made a beautiful second leg M there, as you can see. Look at that, carried on down, hit our heavy support, mapped out on the Axe trading, and a bounce back to neutral resistance. So this is what we're aiming for. We're going to get a continuation to the good side on the open. We've got 30 minutes to go. We will find out. Let's have a look at cable. Cable, I say, slipped all the way down from our TP back down. That was the NFP move. So like I say, that is now done and dusted. Anyway, that's cable done for today. Let's swap that to gold now. Looking at US 30 and gold.
Probably also going to be where we are next week. Right now, euro dollar 101.44, Tom. Of course, we had a break of 101 earlier today. What does that mean for Christine Lagarde? We've talked so much about the Federal Reserve. What's the ECB going to do?
Euro USD is going to be a parity soon, 1-1.
Many stories this Friday on radio and television. Good morning.
NFP.
Waking up to a really solid jobs report from New York City this morning. Good morning, good morning. An upside surprise on payrolls, yields climbing, equities lower. The countdown to the open.
30 minutes. Let's watch Jonathan. We get ready to trade the open. Our final trades of the day. A successful NFP. Like I say, we're well up today, which is brilliant. A really good NFP result. So.
From New York, we begin with the big issue. It's jobs day in America.
The jobs report.
This Friday's payroll report.
The employment number. What we are going to watch is whether that unemployment rate ticks up.
Everyone now is picking on the 2 E's, and that's employment and earnings.
We're going to need to see a real deterioration in the labor market to really worry about a significant contraction.
Employment is still quite strong out there.
Good news is bad news. That just means the Fed could go 75.
The economy is slowing, but the Fed wants it to slow.
The labor market, it's a lagging indicator.
Obviously, payrolls report on Friday will be interesting.
I don't think it's really this month necessarily or next month that we need to look out for.
I still think it's a really tough and tight job market.
It's 2 or 3 months from now or 4 months from now.
This jobs report looks rock solid to me. Here's Mike McKee with more. Morning, Mike.
Good morning, John. It was much better than anyone expected, coming in at 372,000 for the month of May, and up a little bit of a downgrade to April, 384. For May, 384,000. The unemployment rate, 3.6%, unchanged. And the number that is going to catch the Fed's eye is average hourly earnings, revised up in May to 0.4% and a 5.3% annual rate, but it comes down this month to 0.351. So we're seeing job growth without a lot of wage growth. Now, that may not be what they want to see in terms of the average person, but it does suggest that the inflation pressures are easing a little bit, from this high job growth. Where the jobs are: professional and business services, 74,000, leisure and hospitality, 67,000, and healthcare always. But healthcare is also one of the lower paid categories. Retail and warehousing, I'm putting these together because we're seeing fewer people in stores, but more people in the Amazon kind of warehouses. It's almost one category right now. So where does that leave us? Well, I think, John, that this kind of diminishes the importance of the CPI report next week. We did have the decline of 74,000 in the prior 2 months, but as Peter Cheer put it in a note this morning, that's not in the market now. The market now is looking for where we are with inflation and growth. Inflation is strong enough and job growth is strong enough that the Fed can go 75, and it really doesn't matter what the CPI inflation rate is going to be. They're going to be locked into that 75, and the market's going to be back up there as well.
Mike McKee, looking ahead to the Fed off the back of this payrolls report. Mike McKee, thank you. Looking ahead to July 13th as well. That's next Wednesday, the CPI report. In our survey so far, the median estimate 8.8% on inflation in America. Here's the market story. Futures gap lower, then bounce back a little bit, down about 0.5% on the S&P. Yields break out, and if I was going to pick 1 point on the curve right now for treasuries, it's the 2-year. The 2-year out by about 9 basis points, up 3 to 3.1%, up 9 basis points on the session, and climbing through most of this week as well. That's the story with the market. Let's get to the panel. Joining us now is BlackRock's Rick Reader, Mohammed Al-Erin of Queen's College, Cambridge. To the both of you gents, it's been a while since we've both had you both on, so thank you very much. Mohammed, let's start with you, sir. Your reaction to that jobs number from 30 minutes ago.
Well, like you said and Mike said,
As you can see, it's going to form a nice W, we hope. Bounce back down on here, and then we can shoot up again for the open. This is what we want, a nice little wave pattern going on.
Rate at 3.6%, but we need labor force participation to go up. Labor force participation is to the labor market what higher
Like a nice retest
economy as a whole. It can
for
solve
the
a lot of
open.
problems. And unfortunately, labor force participation came down, and that complicates the
It's
takeaways
kind of
from this
thinking.
job report.
Rick, your thoughts?
I mean, I agree with Mohammed. So I'm pretty surprised with the characterization. This is a solid report. It keeps the Fed moving. There's no ambiguity around that. It's strong enough. But I would modify a little bit of how strong this report. I mean, look at the household survey. It was down over 300,000 jobs. There's something strange going on with the divergence between the payroll and the household survey, the top line payroll numbers and the household survey, because it's been the last 3 months, the household survey has been pretty soft. The other thing that, listen, I think you got to characterize as a strong report, but it's interesting if you go back.
The good thing about trading with IC markets, I had all my trades preset. Take 100 pips, 10 pips, 100 points, you know, so it was just a matter of getting into the trade right and letting it play and taking me out of the trade, you know, multiple trades, smaller profits is the way I like to do it. Some people like to hold, whatever, but it's hard sometimes when price swings backwards and forwards to execute the trade in profit. And that many times myself, you look at the screen, it's in green, you go to click end the trade, and by the time it's gone through, it's gone to red. That's how fast the markets can move, so that's why it's good to have a broker where you can preset a level. It's not a pending order, just an instant execution market order, so that's a good advantage of IC markets. I'm sure there's other brokers who do that, but if you're going to do the true scalping method, that definitely helps. Definitely helps, because, you know, that on the whole is quicker than you.
Final big solid jobs report we get. 372 looked pretty solid to me, Rick. Your thoughts?
So I had a feeling you may. So the first time I printed, I said, "Hey, I beg you remind me of that." It is stronger than I thought it would be from that top line. Again, there's something funky going on around. Why is the household survey creating this sort of softness? Why are the openings? Whether you look at all the ISM data around employment, I mean, it's pretty clear the employment numbers slowing pretty quickly. This was a solid report, no ambiguity to it. It was more solid than I would expect. I'm curious to see over coming months how the revisions take place, how you think about this, but it is definitely more solid than I would have thought it would be.
Mohammed, is there anything in the data, as far as the eye can see from your perspective, that you think gives this Fed pause for thought, makes them sit around, look around and say, we need to slow down?
They won't get that from the CPI data. They won't get that from the jobs data. They would get it if they took a more holistic view of the economy. You know what happened to orders in ISM. But this Fed isn't stopping. This Fed is going to do
Yeah, we're
75.
neutral zone of the RSI. As you can see, candles were the same in the match. So
And this Fed
let's
needs to
wait
catch up
for this
now. They're
open
not
in 20
just
minutes.
reacting, they are catching up.
Gold's a bit more range again. We've got a reversal indicator here. Again, forming a similar pattern of W is what we're looking for.
Can we talk about how restrictive you think they need to get, Mohammed, reflecting on the minutes we've had earlier this week and folding that into the data from this morning?
So I think they certainly are going to try to get to the restrictive level. I worry that on the way there, they may break something, and then you get the stop-go phenomenon that would be the worst possible outcome for this economy. We need to get inflation out of the system. We really do. And we need to take advantage. We should have taken even more advantage last year of the strong economy, but we still need to take advantage of a strong labor market to get that done. Because otherwise, we will have both an inflation problem and a growth problem next year.
Something you've said, Rick, and you've said a few times, they need to get to neutral first. Rick, are they anywhere near neutral in your mind, from your perspective?
So you get to 75 done in July, and then you get to about the number that would have been neutral. And like Mohammed says, you got to go a bit past neutral. Listen, one man's opinion. I think they're going to go to 75. I think they'll get a 50 done in September. But I think we're going to get data over the coming months. And by the way, we've seen a lot in the last week and a half. You look at some of the the personal spending data. You look at some of the ISM data. You look at PMIs. And by the way, Europe, the dynamics around Europe. I think you're seeing a number of characterizations that we're going to see through earnings as well.
See, we're right on neutral support. Beautiful, where the center of a W is right on our neutral support, daily pivot, and blue support zone all kind of ties up together really nicely. So the chance of this pattern back from here forming from here.
Starting to crack a little bit. Listen, I do think that they're going to go to 75.
Unit is going to be a buy on the open, but we don't know for sure. I want to see some confirmation.
And I think the data is going to corroborate that they're going to slow down.
Like I say, we've got a Fed speech, a couple of hours. We've got wholesale inventories and medium one half an hour after. What will be done by then?
Less by a good amount.
So I don't want to risk, when you've made a good profit, take the money.
Very high levels of cash.
The way to do it, and then just play with house money, just take out your profit.
One thing that the Fed has certainly pressed on is getting financial conditions to levels that will be influencing in terms of inflation. And boy, these levels have moved. And, we talk about equities, which I still think are just okay. I can't find a lot of industries I think are super cheap at these levels, not many at all. But, the credit markets, we started to let the line out a little bit on some of that cash. You think about if we're going to be run rate inflation over the next 5 to 10 years, let's say it's a bit higher, and let's say it's 3-ish, which is higher than markets are pricing. If you could buy high yield at 9.5, you could buy investment grade quality in the front to the medium part of the yield curve at 5-ish. Boy, that's a pretty good real rate. And so I would start with, do you own some more quality? Do you own more U.S. than Europe? Because Europe's going to have some duress around gas rationing, et cetera. But there's some stuff to do now. I still think we're going to get more chances because the data is going to be soft, I think, over the coming weeks and months. But yeah, we're letting the line out a little bit. And today doesn't dissuade us from doing that. Although, again, the Fed's certainly going to be more comfortable with moving over the next couple of meetings.
Mohammed, can I throw the same question at you? More or less risk averse as this year progresses?
Knows.
So I've been pretty risk averse, as you know. Like Rick, I think there are some bargains out there. This is not a general statement. This is a very selective statement. What would make me have a generally constructive view as opposed to a selectively constructive view? One is inflation. If inflation proves not to be sticky, John, that's the major question you have to ask all your guests, is how sticky will inflation prove to be as the economy slows? And two is something you and I have talked a lot about, and Rick mentioned it, which is the market dynamics, the technicals, the liquidity, the dislocations. Dislocations have a tendency to create contagion. That's great if you are defensively positioned. It's not so good if you are overweight risk assets.
Mohammed, that's why I'll never let you sit in this seat, because you ask better questions than I do. And we've seen that in the past when you've tried to play anchor on this program. You did it just then. So, Mohammed, you can have the floor now. You've asked your own question, answer it. How sticky do you think this is going to be? And what kind of numbers do you think we settle down at the end of the year?
So, John, I've learned from you. I'm going to give it to Rick. Rick, you said that the economy will slow down. What happens to inflation? How sticky is inflation? How worried are you about the third and fourth round of Feds?
Do I have somebody to pass this to? So I would listen. I think it's going to be we're going through a deglobalization phenomena that is real, and that means we're going to have higher levels of inflation that we've seen in the past. And quite frankly, a slowing economy doesn't bring down the supply shocks created when you take 11 million barrels of liquids off the market from Russia. You don't replace that, and amount we've calculated it takes 1.2 million to get 1.2 million barrels of demand down. You got to get the unemployment rate up 2%. That's an immense move. Meaning you're gonna have a sticky high energy, you're gonna have a sticky high food inflation, and shelter's hard to bring down. At the margin, it's coming down. We think top line CPI is going to show over 8 probably through September. But then, you look at core PCE and the wedge, and that's coming down significantly. So it's coming down. But listen, you have to operate. This is part of why I think some of these markets that are giving you real rates above even elevated levels of inflation, you can get a bit comfortable with. But yeah, Mohammed,
We've got 15 minutes left.
Deglobalize an economy, and you'll see
We'll be
companies
here
that
for the
have
open.
to bring more regionalize their business. You have your hurdle rate on investment has to be reflective of that.
Rick, Mohammed, sticking with us. Equities down 0.5% on the S&P and the Nasdaq 100 down a little more than 1%. We've talked about that move in the front end of the curve, up 10 basis points on a 2-year to 3.115%.
Futures
on a
down.
2-year yield right now. About 17 minutes away from the opening bell. Let's get you some movers. We can do that with Abby.
John, will that move in yields on this jobs report that is perceived as perhaps inflationary, or at least giving the Fed the green light to keep raising? We have, not surprisingly, tech lower. That explaining that underperformance for the Nasdaq 100 down more than 1%. Both Apple and Microsoft down about 1% or more. Earlier down just slightly. So those fears around valuation and growth coming back into play. Twitter, of course,
Logging
down
back
too,
into broker.
down 3.4%. But that probably
S30 loaded up.
more to do with that recent report suggesting that Elon Musk's bid, that potential deal is at risk. 3 people saying the Musk camp is unable to verify the provided bot data. But one bright spot, of course, John, with yields rising, we do have Bank of America and some of the other big banks higher right now, up almost 1%.
Abby, thank you. Coming up on this program with Rick and Mohammed, the Biden administration nearing a decision on tariffs on China.
Tariffs are one tool, but we have other tools as well to make sure that we are protecting key sectors of the American economy.
It'll be interesting.
That we are,
You see it's forming this nice W. Okay, he's got to be patient. Here on a 3-minute time frame, you see how things move nice and slow. There's no panic. RSI is still 52 neutral, so nothing's really happening. It's waiting for the open now. You don't want to be taking any trades, risking, assuming a direction, because we just don't know. I'd love it to be this W pattern. It might not. Could just go straight up. Could just bottom. Nothing surprises me. You would just be prepared to go in either direction and just use the RSI or even the MACD as some kind of confirmation. At the moment, we've got a green MACD with the neutral. It might push up, but this changes red, and then we get red, and we get a cross below our average RSI line. Then we're selling. We're going to bounce off a heavy support.
The Indian city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its 2 biggest billionaires.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
There's no question that if you look at what the Chinese economy and the non-market practices that the Chinese leadership are undertaking, that there are sectors of the economy where they are engaged in unacceptable activities and that those present a strategic risk to our economy and our national security. Tariffs are one tool, but we have other tools as well to make sure that we are protecting key sectors of the American economy and that we are holding to account for those.
President Biden set to discuss a potential pullback of U.S. tariffs on China. Tariffs on more than $300 billion in Chinese goods as the administration tries to curb surging prices. AMH joins us now from the White House. Anne-Marie, we've heard this for a while. How much closer are we?
Well, he's having another meeting today with his close advisors, so it does seem, Jonathan, that he is inching very much more so closer than we were months ago when a lot of this we were discussing about whether or not he should lift some of those tariffs from the Trump-era tariffs on China. The big issue in the administration, of course, is this is a debate between the foreign policy hawks on China and those that are trying to do anything when it comes to easing inflation. But I would say big picture, what you could see from the administration is that domestic policy goals, namely bringing inflation down, bringing down food prices, bringing down the cost of gasoline, has had this administration shift some of their foreign policy goals, like potentially lifting some of these Chinese tariffs, but also the president next week heading off to the kingdom.
Important point. AMH in front of the White House. Anne-Marie, thank you. Mohammed and Rick, still with us, I'm pleased to say. Mohammed, straight to you, sir. Can you have a credible forecast on inflation without a decent understanding of what is going to happen with the Chinese economy? Because the stop-start there has confused me, and I imagine it's confused many others too.
No, you're absolutely right. And let me tell you, John, I'm willing to put my neck out and say it is going to continue to be a problem. You cannot reconcile zero COVID policy with Omicron if you don't have the mRNA vaccines. So unless we see China change its vaccine policy, and then it will take time to vaccinate its population, we are going to see a continued attempt to have a zero COVID policy, hit the reality of Omicron and result in shutdowns and disrupt supply chains. That's just it's almost a done deal, John, given what this variant of COVID is like.
It raises big questions about the credibility of the recent rotation we've seen in the equity market, Rick. Bank of America and Michael Hahn out this morning, highlighting that rotation from inflation commodities to deflation tech assets. Your thoughts on that, Rick? Your response to it? Just how credible is that rotation, this bounce we've seen in certain parts of this market?
So I think, I think generically that's right. I think it's a lot more nuanced than that. Listen, energy's come off a lot. Materials have come off a lot. You know, so let's break it down. I mean, think of the metals market. I mean, things like copper, aluminum, prices have come down a lot. Those stocks have come down a lot. You know, there's some value there, but boy, if the economy is going to be slow for a while, those are pretty hard. Energy is pretty, you know, as per we just talked about, energy is pretty well supported and will be for a while. We've brought down some exposure in energy, and just because valuations have moved, and you know, relative to forward curves, you know, we think it was worth, and there's some crowding that's gone into that. Listen, I think tech, there's parts of tech, you know, do I think semis are still tricky? If the growth is slow, you know, the oversupply, there's an oversupply of semis, particularly in some space, so that's a tough area. But software companies in an inflationary world, companies are going to spend more on cloud and AI and software. I think those areas to move into or to increase exposure there and parts of big tech, that I think is durable. And that I think, and by the way, those valuations have become, people trading with interest rates. It's like crazy. I mean, top line revenue is, you know, 25-30%. You get pretty comfortable with these multiples.
Well, I was going to say, we're looking ahead to earnings season as well, looking for those revenue numbers, those earnings numbers. Mohammed, many people have come on the show over the last few weeks, and I know you've heard from the same people who have been surprised that we haven't had enough earnings revisions. I've been surprised too. I'm looking at the US dollar that's had something like a 10% rally since the end of Q1 this year. For the S&P 500, I can only really think of one big multinational that's come out and said, this is a big problem, we need to basically pre-announce, and that was Microsoft. Mohammed, you factor in the potential for a recession in Europe. I'm not sure we can even say potential. Let's talk about reality. Have you been surprised by how much the earnings revisions have just remained pretty steady in certain places?
Surprise, no, John. There's an inertia to them. You know that, right? It's very hard to revise down. And then once you start revising down, it becomes a herd behavior and it builds on itself. So I'm not sure whether we will be having this conversation in 3 months' time for the reasons you've cited. You know, we've gone from a cost issue for corporate America, which you could pass on through higher prices, to a real question now as to whether your demand will hold. The focus is going to be much more on revenues, and the currency issue you raise just amplifies that for companies. So I suspect we will have quite an avalanche of revisions coming our way in the next three to 6 months.
Rick, let's finish on that. Where are the revisions based on foreign exchange alone? And then that's just reality. We've got to adjust to that. How are we meant to adjust to that?
So I'd say a couple of things. First of all, the last quarter, a lot of the earnings, and it had come through, when you break it down, you saw units down, but you saw revenue in a pretty good spot because you were getting pricing power. What's starting to happen is you're getting the inability to pass.
5 minutes to go. See what's happening.
I think, and there's a lag to that. And I think you'll start to see that over the coming quarters. Listen, I think the earnings in some areas will still be durably high when you break down places that you're still getting, certainly, we talked about energy and other places, you know, where you can pass it through. But listen, I think there's a transition taking place. There's a real lag of, gosh, my revenues are good, but my units are declining. And certainly the rate of growth, if not actual descent.
Yeah.
And now it's, well, I can't get that pricing growth, so you're going to see some reduction.
You can see just ranging nicely. So are we going to see a continuation to the upside, or is it going to pull back? Next is probably going to be this.
I think you'll see that over subsequent quarters, but I think it'll be more erratic than people think. I think there'll be more dispersion because there's still companies. We see a lot of them.
So gold is the upside.
The backlog is still durable.
Yeah.
So I think it's more dispersion than it is a sheer devastation of earnings. I think they're down, but not that bad.
Hey, Rick, awesome to catch up. Fantastic every single month after payrolls. And a special thanks to Mohammed, who was live texting me from the airport back to Cambridge to make sure that he could make this segment. So Mohammed, just awesome. As always, sir, to the both of you, thank you. Up next, your morning calls, and later, Secretary Walsh from the White House.
Minutes to go. Some figures. Asia index. See if we can grab a few more pips. Nice coffee. Get us through this session. No more than an hour. That's all you want to be doing. Just trading these opens, trading these news events. Scalping, that's it. At the moment we're still green on the MACD, we're neutral on the RSI, so we don't know which way we're going yet. Choose what lot size we're going to go in on. We're going to go in on 2. The margin of 261. Our account is 744 now. And we're looking at 20 cents a pip on US 30. So small amounts, that's what you got to do. Practice with small amounts. Doing demos great, paper trade, but to get your strategy right. But then you need to practice with small accounts to overcome that fear of trading your real money, your own money. There's no substitute for it. That's my advice anyway. Take it for what it is. USD just starting to pull back a little bit. Is it going to bounce off our support? We're going to continue down for the open, or we're going to get a shoot up. Remember, the news was better than expected. It'll be interesting to see if we get any manipulation to the downside for a bounce up, or if we go straight up. We're counting down up. 1 minute 30 seconds to go.
Calls, JMP downgrading
Here's your morning calls.
Tighter funding and limited visibility. Wells downgrading iHeartMedia, expecting an upcoming recession to hit radio hard. And finally, Wedbush cuts its price target on Twitter to 43 on uncertainty around its deal with Elon Musk. Up next, reaction to a solid payrolls report from the White House. It's Secretary Walsh and your opening bell next.
We got 1 minute to go. Go to advert break. The 50 seconds counting down. Let's wait for the RSI. We're going green or red. Let's hope it's green. Let's see a push up. Probably get up to, look at that, even to our next resistance line is 16 pips. Do nicely. Small move. The downside's going to force its way through the support, up and down. So let's see if we get a bounce. 20 seconds. Logged in, we're ready to rock. Trying to push down, RSI 48, 10 seconds. Don't be fooled, don't jump in. Go, let's see. Going to be response to NFP. 49, RSI 50. Ranging. 1. 52.
Which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space.
One trade away already, hit profit. 10. About $20. On 2 lots. See if we're going to get a bounce off this resistance zone now, look. Support zone rather. Got the 1 trade away at the moment. 47 on the RSI. We've got 1 buy, that was really good. Straight. Wait to see if there's any more trades, we can get any more away. Nice manipulation to the downside, look at this, beautiful, beautiful.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management. It's a challenging dynamic. We could continue to see that kind of strength.
RSI 43, red, MACD still green, so no trade. We're on our neutral support, we're on our baseline.
Why do the biggest names in business choose Bloomberg? That is a great question.
Let's wait for this bounce. See what we get.
Great question. That's going to be the best question I get all night.
I'm glad you asked that. Bloomberg Television. Top experts. Great questions.
I think that it's hard to put your head around any narrative. Let's just be honest.
And that's centered here, as I said.
Are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
The headline number delivers
Two
an
lots.
upside surprise on payrolls Friday this morning. Good morning. Off the back of it, equities lower. Equity futures down 0.5% on the Nasdaq after a really tidy week of gains on the Nasdaq 100. We're down about 1 full percentage point on the Russell. We're down for like 4/10.
Nice manipulation.
You'll find the why in the bond market. Switch up the board and get to the bond market. 10-year yields climbing higher. 2-year yields by
They're just behind us.
5 basis points on a 2-year. Up this morning by about 10 basis points rather on a 10-year.
RSI 45.
0.043% on a 2-year right now. We're back down to positive 8 basis points. I'll get my numbers correct for you. Up to 3.1%. This idea that the Fed's going to have to do more, go 75 basis points at the end of this month, pushing equities back down again. In the FX market, euro-dollar briefly breaking 101, then bouncing back. Bit of resilience here after getting absolutely hammered over the last few months. Euro-dollar 101.68 and crude 104.63. Output in America looks good based on that labour market report, and we've got a rally again on crude. About 40 seconds into this, let's get you some moves around the open. We can do that with Abby.
John, sticking with that stock and bond story, and of course after that hotter than expected jobs report, yields higher. Well, as you mentioned, that's pressing stocks lower, especially big tech. Microsoft being one of the big culprits on the day, down 1.4%. Of course, rising yields bring into concern valuation. Twitter underperforming on that theme as well, but it also has to do with that Washington Post report saying that the deal, Elon Musk's potential deal to buy Twitter, is at risk based on the fact that they may not be able to verify the company's bot information. On the upside, though, in one of the few sectors that's higher,
Breaking to the downside, adjust our W pattern. Looks, it was exactly as I said, a centre leg.
and the same deal
Centre leg W.
are another one of the up sectors. JP
All nice open market manipulation. So let's see.
Abby, thank you. You
Get to
mentioned that
buy.
Twitter deal, so let's talk about it. The stock is
Take
down
a
about 4%.
buy
Here's the
before
quote
we
from
end the
Washington
stream.
Post story that Abby
In any
referenced.
positions at the
It is,
moment.
"It's in serious jeopardy.
Waiting.
Musk team concludes Twitter's
RSI 39 is breaking 38.
fireball. Musk is going to deliver a speech from Sun Valley tomorrow. Our man is there right now. Let's get to Ed Ludlow for more. Morning, Ed.
They jumped in on the sells. I jumped in on the buy.
Spread on the deal is at its widest point since mid-June, around $17 between the $54.20 offer price and where we're currently trading. The timing of that
MACD is now red as well, look, so it could be a continuation. Got heavy support, minor support here as well. Catch.
Are less than 5%. They said that the methodology and data was not verifiable by a third party, but that they used a mix of private and public data and that they could verify it. Then you had the Washington Post story come out, and that's really what it's about, according to an.
Let's see if you're going to get a push up, look.
Camp does not think that it's verifiable. What's also interesting about that reporting, John, is that they say Musk has stopped talking with at least one
moving. Look at this.
equity partner
Push.
on the financing side. I find that interesting because reports had been that Musk was talking with many potential equity partners. So if he stopped talking with one, it's hard to draw an inference from that. Musk arrived to Sun Valley yesterday evening, sources tell me.
Wait now, still red.
We haven't laid eyes on him yet.
See if it's going to use this as a support.
He's going to speak Saturday, and my understanding is that he will address this issue.
Not major news for this market that sniffed this out quite a while ago. Ed Ludlow, thank you on the latest. Looking forward to that speech and your coverage of it. The stock's down by about 4%. Where are we? 37 handle. Agreed price was 50.
RSI 40, 39.
The last time we were anywhere near that agreed price on Twitter. Right now 37. Let's call it 37.30. That's the story for Twitter. Here's the story for the broader equity market about 3 minutes in. Stocks lower by 0.4%. On the S&P, on the Nasdaq, down about 0.8%.
There you go, another cheeky $10 on the sell. Jumped in and out there as it bounced off that line. They got to be true scalping, man. Just take those little opportunities, just those little wins.
And a big rotation from inflation, commodities, to deflation. Tech assets. Let's get to
Many using small lot size, you know.
The basic idea here is that rates are going to go up, growth is going to go down. So then where do investors go? The answer seems to be cash. At least that's what we saw over the week ended Wednesday. When you take a look at flows, 63.
So look, this next one, RSI 39, MACD still red.
In some sense, getting out of other assets. Now, the money also is going into bonds, $2.4 billion worth of inflows there globally. So that does signal that desire for safe haven. But then look, equity outflows, $4.6 billion. So what does that signal about the trajectory of this market? Well, Hartnett says we're going to be range bound, that will trade between 38 and 4,200 basically through the summer rather than seeing a continued rebound. And it's worth noting we've already been in that range really for the last 2 months. He goes on to say that the bear market isn't over and the big low has yet to be reached. On the surface level, beneath the surface of the index, he talks about that rotation you just mentioned there,
Ranging
John,
around,
out of
look, as you
commodities
can see.
into plays like technology as the narrative shifts from one of inflation to one of deflation. And we certainly have seen that reflected in commodities prices themselves across the ags.
Hanging against that resistance, look now.
Coming down. It helps explain why energy, after being far and away the outperformer in the first half, a week into the second half, it's the worst performer on a sector basis, John.
Kelly Knight, thank you very much. All responding to this payrolls report. This equity market shifts lower, yields break out. And there's a broad consensus off the back of it that this Fed is going to 75. Here's BlackRock's Jeff Rosenberg.
Wait for this move. Wait for the move.
Payroll slowing here and the lack of an increase in participation is just again highlighting the pressures on the Fed here, that you have an overheating economy and they need to really push on the demand side. And so you're seeing the reaction in the front end, reflective of that.
The perfect panel on fixed income right now. PGIM's Mike Collins, SocGen Subhadra Rajappa. SocGen Subhadra Rajappa, do you agree that we're going to 75 at the end of this month all over again?
Yeah, most likely, given the fact that we've had a very strong payroll print and there's no reason to believe that the inflation print that's due middle of next week is going to be any different. So the Fed has stated very clearly that they're keen to front-load rate hikes. We've heard from a few Fed speakers, Waller, Bullard, and others who are in favor of a 75 basis point rate hike. So this is the perfect opportunity for the Fed to be able to deliver that 75 basis point rate hike and deliver as many hikes as they can between now and September, and then perhaps think about slowing down the pace of hikes after that.
And then when did they pause? Subhadra, this keeps coming up. 75 looks nailed on. As you point out, this summer, they'll keep going. It's the what next of it. Matt Lazzetti of Deutsche Bank this morning told us on Bloomberg Surveillance they get to 4%. Do you share that confidence, conviction they get to 4%?
I don't. I think that what happens is that they probably get to 3 to 3.25% in a rush, and then take a much more measured approach on rate hikes.
There's a nice buy. Look, beautiful.
In trying to raise rates all the way up to
There's the move.
beyond, and then have to cut very soon thereafter if the economy starts to slow down. So why not take a much
I was on about. Look at that, beautiful.
Get rates up to maybe 3.25%, and then pause, see how
Let's hit TP on that one. See if we can grab another. No, come on, come on, come on, come on, come on.
Question 1, 75 at the end of this month. That's the easy one. Question 2, can they get Fed funds to 4%?
Yeah, I mean, definitely 75, I think, is in the cards, right? And I think this gives them the opening to do that for sure, Jonathan. So check that box, and then I'm taking the under on the 4% for sure. I mean, the markets are pricing in.
Yeah, you've got another 3 buys there. Beautiful, beautiful, beautiful.
So the question is,
those very nice.
We'll take even the under on the 3.5, right? If they do 75 in 2 weeks from now, remember the September meeting isn't for almost 2.5 months from now. A lot can change between now and then.
So simple, just got to wait. Waiting. Told you there was a sell manipulation going against what we thought. Good news, markets drop, and now push up. Let's see what happens now. We've got a green MACD. So all we want is a green RSI, and we can go again. It's going to range. We're in the centre of a W, remember.
Do you share that view?
Yeah, I do, Jonathan. I don't know if I would say it with 100% confidence, but I think 3.5. Above that on the 10-year is kind of a high water mark for the markets. I mean, the markets were pricing in just a few weeks ago, a month ago, a 4% terminal funds rate. And I felt then that was clearly a peak in terms of Fed rate hike expectation. So I think we've kind of passed that peak. And, when the curve inverts like it has and like it is today, Jonathan, typically that's not a signal to go into cash. It's a signal to start extending.
See if we can get any more. Just wait and see for the next move. Red, green MACD, green RSI. Come on, another push. Nice candle, that one. You can see the indecision candle pin bar on the last one.
Remains pegged on its path towards higher policy rates going forward. But the one thing that we're not really paying attention to is the balance sheet runoff. It's just starting to get underway. So, if you think about it, by the time September rolls around, the Fed's going to be rolling off, close to 100 billion every month is going to be rolling off the Fed's balance sheet. So
brilliant. So again, in and out again, and we got another $20 on that one. Beautiful. Then out, no messing about.
After September, a measured approach for policy definitely makes sense, especially given the fact that the yield curve is starting
nice green,
and that's going to start signaling a meaningful slowdown in growth in the next 12 to 18 months.
Subhadra Rajappa sticking with us alongside Mike Collins as we work our way through some of this data. In just a moment, we'll catch up with Secretary Walsh from the White House off the back of a decent payrolls report. 372, nice upside surprise on payrolls, delivering some gains into equities, you would hope, but that's
beautiful.
Not how the story works.
Yeah, 2 more buys on there as well.
Because it's yields higher, equities lower. On the
Another
S&P 500,
$35.
on the Nasdaq a whole lot more. Looking at treasuries this morning, yields higher by 8 or 9
This is going to push up.
on a 2-year to 3.1%, on a 10-year up 6 basis points right now to about 3.052% going into the Fed later this month. From New York City on Bloomberg TV and on Bloomberg Radio, I'm Jonathan Ferro. I'm very pleased to say that we are going to be joined by Secretary Walsh in just a moment. I want to take the opportunity to troll back Tom Keane, who's been trolling me all morning, because I know he can hear me in the radio booth now. Just so you know, Tom messages me every other minute when the market gets open.
Got green MACD, got green RSI. This is what you want.
44. So thank you, Tom, for sharing that with me. I'll do credit spreads a little bit later. Secretary Walsh, I'm pleased to say, joins us right now. Secretary, great to catch up with you, sir.
Amazing, isn't it? Just as I mapped out, look at that. Said it'd be a.
First of all.
No, it was a good
that's what you
report.
class as the open, really, because that's the move. The move was the W. The end. It was exactly what I said.
Manufacturing sector, same thing. In the childcare sector, for the first time, quite honestly, in a little bit, we've seen some gains, which means that our childcare facilities are getting a little back to, I wouldn't call them back to where they were pre-pandemic, but we're seeing some growth there. Warehousing and obviously manufacturing, we're seeing some great growth there as well. So we're seeing our job economy moving forward. The wage growth, we're seeing the biggest, well, some of the biggest gain in the lowest income earners, which is good. Obviously, we're still dealing with inflation, and the wage growth isn't quite keeping up with inflation. But I think what we want to do is actually bring inflation down. So we have to continue to move forward. But this shows that where the country is, with President Biden laying out the plans when he took office, is still moving forward on the job side. But as you just mentioned, there's still a lot of unanswered questions about the economy.
30 seconds left on this candle.
Very, interesting place.
Green all the way.
The last few months to give me updates on what's happening on the West Coast. I understand the contract with the West Coast Port Union expired and talks are ongoing. You've said a few times on this program that you're not concerned. Are you concerned now?
No, I'm not concerned because both parties put a statement out, two statements now, letting people know that they're going to continue negotiations when the contract expires July 1st. I've spoken, I didn't speak to them this week, I spoke to both sides last week. They both said it's moving in the right direction, both sides, I should say, the unions and the companies. And obviously, we haven't had that issue yet that might pop up.
Watch this final move, see if we can get any more buys, and then we're done.
I like where it's going. The interesting thing about this negotiation, it doesn't start until 6 weeks prior to the expiration of the contract. And that's one of the things that, a little different than most contracts. Some contracts you can start
Final push.
months prior to expiring. But I feel good where we're going. I know there's a lot at stake. Clearly, we don't want to have any issues like we did last holiday season and last fall with boats out with ships out in the harbor and not getting supplies in. So I do feel good where we are during today.
Secretary Walsh, as you know, this is a really important topic, and I can take your word for it that you feel good, but other members of the audience might not. Can you help them understand what's at stake here and the details of the negotiations? What's stopping this one from closing? What's the gap? How big's the gap, and what's it over?
Yeah, so just so everyone understands, when they do
Up, look, trying to push up a bit more.
they generally go on for long periods of time. And historically, under 2014, it went on for a long time. There was no strikes or slowdowns or lockouts. But what we want to do right now, in the time that we're living in, making sure that people's pressure...
Forming that beautiful second leg.
At home, they're paying for goods and services where they're seeing inflation obviously impacting their families. I want to make sure, and President Biden wants to make sure that we don't have a breakdown in negotiation at the port to add additionally to inflation, additionally to costs. And that's what's at stake, quite honestly. And the contract that they're negotiating is everything from wages to working conditions to everything that you can...
Gold, on the other hand, was a sell, look.
There are tens of thousands of...
There is your open.
There are 9 shipping companies involved in this negotiation.
Continuation again.
Very long negotiation.
What we saw on NFP.
Very challenging negotiation at the table. But when I hear from both sides the same exact thing, that it's moving along, I'm pleased with that. I'm not concerned about the contract expiring on the 1st of this month.
Sure.
Certainly, next month I come on this show. If we don't have a contract and we're not close to a contract, then you and I might be having a very different conversation. But right now I feel good.
Well, let's talk about that. As you know, you can't take their word for it either. Are you preparing for the possibility of a strike? Can you continue talking about what those preparations look like?
Yeah, I'm really not concerned about strike. Last time there was a strike at the ports of LA and Long Beach, it was in 1972, I believe. So we haven't had a strike there in quite some time. And the way I look at this, these workers and these shipping companies and these suppliers and everyone working at the port, particularly the workers, they've lived through and worked through a pandemic like a lot of us have. They went to work every day. They were still unloading ships. The supply chain issues or the shortages at the port weren't necessarily because they weren't unloading the ships. It was because the manufacturing stopped in China. They shut down manufacturing just like they did earlier this year. So workers want to go to work. If workers don't work,
Ranging around, look.
They're not a salaried bunch of people. If they
Wait for that final move to come.
Workers. And that's why for them, there's an interest for the people that work on the ports to make sure this contract gets resolved and they continue to work.
Secretary Walsh, just quickly and briefly, and I respect your time, and I just want to squeeze this in. You mentioned China. The President, we understand, will be meeting with advisors today to consider removing tariffs on China. We've been told many times over the last few years from the previous administration and this one that a lot of this is about
pull back, look.
and also protecting American jobs. Do you have a seat at the table in that conversation?
No, I'm not necessarily at the table. I've been involved in some conversations, and I think that, I'm not sure exactly what's
that goes red, then we're looking for a sell.
What have you said back to them?
Simple as. The red MACD, red RSI, we sell. Waiting for more buys. We go in the direction.
Of inflation, but we're also going to keep an eye on the jobs that are here in the United States. And the president has certainly laid out in the beginning of his presidency a big opportunity to create more opportunities in manufacturing in the United States of America. One thing that's indirectly related.
Right, so that about wraps it up. We're going to wait for this one. Like I say, we'll be doing more live streams next week, and we're doing some end of session, end of New York session trades as well. But we've got a return of 100% today plus on our account from 400. So well done, and well done to Justin, winning $1,000 there in 5 minutes on NFP trading. That's what true scalping is all about, just to show you can do it. But again, thank you for joining me.
It looks like we're going to have an earnings drop next year. And I don't think that that's going to be reflected so much in second quarter EPS. It won't be a quarter of big upward surprises.
That conversation up next.
So yeah, thanks for joining me. We'll see how this plays out. We'll wait for some more buys. We've got it on the sell, which is really cool. Just a single. Really nice. So yes, we'll be back. We'll be back for the next. Oh, I'm just going to try and get in on here. Yes, hey, we just got a cheeky sell to end. Nice one. There's another $15 there. So perfect. It's been a good day. Watch this sell. Look at this coming down even lower. There was your open move though. And we'll see if this comes back and completes our second leg later on. Like I say, give us a like, go to the website www.mohawkforex.com if you want to learn the art of true scalping, and until next live stream, trade safe everybody, and see you on the other side. Take care.